Hello and welcome to another episode of Techfanaticofficial, your honest guide to the Cryptoverse. Today, I just want to do a different video. Usually, I talk about a project, a launchpad, or a project that's doing a listing soon. But I've received a lot of feedback that they want some educational content as well. I always try to avoid doing educational content because I don't want to provide financial advice. I don't think I am to the level that can provide you with that much information, and I'm more specialized in the pre-sale. But there are a lot of learnings I had over this year in 2022, and now that we are approaching Christmas and sort of I'm winding down to get to the next year with a better market, hopefully, I'm going to share with you top 10 common mistakes I've seen with the projects I've worked with, I've advised, and also investors. So as an investor, you also invest in these projects, or even I cover videos for them. So it's a mistake I've made and you've made as an investor, and also the projects have made. And if people at least look at these 10 factors, probably will have a better successful launch for a lot of the upcoming projects, especially in 23, which I'm more hopeful. Bear in mind, most of the projects that I do are in the entertainment area. So GameFi, Metaverse, Move to Earn, NFT, and music. It's a bit different from DeFi, but I'll cover some of the DeFi aspects and layer one solutions as well. So let's jump into it. The first mistake I have seen for the project is high valuation. And there are a couple of problems with the high valuation. As you know, looking at the chart, in 2021, we were in a bull market. The total market cap of crypto almost hit $3 trillion. That's like 10x of where it was a year ago before that. So in 1 year, whole market cap 10x. So if you think of an index, if you invested $1,000, on average, again, could be much higher, could be much lower. On average, your investment would have gained a 10x in a matter of a year. So in this sort of environment, there is a lot of liquidity available for people to invest, for people to do trading, and obviously it inflates the valuation of projects. So projects that have been launching in the beginning of this bull market, they had much lower valuation because they just came off a bear market. And when people invested, there was more liquidity coming in when the token goes live, and the valuation on chain goes higher. But when you are in the bull market and the peak of the bull market, what happens is projects get more confident. They do the valuation not based on realistic valuation. They do it based on what's happening in the market, what's happening in investment. Project X Star Atlas has done 100x. Sidus Heroes has done a 90x. So why not my GameFi project? Maybe it's going to do a 20x. Let's do a higher valuation. Let's do a bigger raise, for example. And remember, why are you doing a raise as a project? You're doing a raise for your runway, for your development of the game, for injecting liquidity, for marketing, for airdrops, things like that. So you need to cover it for this. And if you're doing more, it's gonna actually damage you in the long run, unless you don't care about the project, unless you're just doing a pump and dump and or just trying to raise money and take the money away and say, hey, the project didn't work out, which I see is happening in a lot of the cases. So high valuation in the bull market is okay because a common valuation of 30, 40, 50 million valuation for a GameFi was common. But when we came to bear market, those valuations don't apply anymore because simply there's not the same buying pressure for it. So valuation of 30, 40, 50 or higher is just going to dump your token because more and more token from earlier rounds and private rounds are going to be released. You don't have the money to buy back, and you're going to see a huge dumpage. You see a huge dumpage in the chart. People are going to be annoyed with the price of your token, and you're going to lose a lot of people. And a lot of the existing people who invested are going to call you a scam, even if you're not a scam, if you're a real project, right? So just giving two examples. For example, there was one called Unique Network. And Unique Network was really popular project. It's a DeFi project, but it raised a significant amount of money. It raised on a huge valuation. And as soon as it launched, it basically didn't even below the IDO price from the start. think this was the IDO price. It went below the IDO starts from the start, and then it just dumped. So it's already dumped to minus 90% of the price of what it was. If you look at a 1 year chart, minus 90%. And there's only $250,000 volume for a project that has a valuation. I'm not sure if I should see the white paper, but this is an Animoca backed project. This is a project that's supposed to be super strong. By the way, you can also check CoinGecko for some of these. I've noticed CoinGecko actually is now giving you the ICO prices for a lot of these, and that's really cool because then I don't need to do a huge amount of research if I'm trying to look for it. So let's see if I can find Unique Network, if they have listed it. Well, hopefully they did because it's a big project. I think it should be Unique Network. Let's see. Yeah, tokenomics. Oh, tokenomics is not available for this. All right. Well, if you go to their website, you're gonna see the tokenomics for it. There's a lot of videos, but it was, I think, $40-50 million valuation for this project based on Polkadot. It is a very good project, right? But it's just simply not bullish enough for this market. It's a, you know, sort of a NFT for Polkadot ecosystem. Polkadot is not doing that well right now, even though it's a great, you know, project to invest long term. But right now, it's not the sentiment around it. And then they didn't reduce their valuation, so people just started dumping, especially people in the earlier pre-sale rounds. Other ones I can think of in layer one could be Panther Protocol, for example, that also had the same issue. As soon as it launched, it started dumping, and it never went back up. Just dump, and now minus 90%. And of course, a lot of GameFi projects also went minus 90% and low valuation projects. But the thing is, these projects started, you know, they started with this dumpage. So right now the market cap is 5 mil. The fully diluted value is lower than what it was when they launched. So that's what happens. They did a huge amount of raise, I don't know, $20 million worth of raise, Panther Protocol, during the whole 1 year of bull market. And then they didn't reduce their valuation, and then they ended up dumping. There's the same example for a gaming project. So you saw I did a video on Fota. I was advisor for them, and I still am. They raised on a valuation of $100 million. And that valuation for a game that's working, that has daily activity, daily users, there's a revenue, that makes sense. But for a project that's going to release the game, it does not make sense. So they raised around $10 million at a valuation of $100 million. So that's why you see 10% of the token is in the raise phase. And the token price, I think, was 0.017 for IDO, 17 cents basically. They launched, it did go up to 90 cents at some point for the first month. But remember, they raised all these funds during the bull market. They raised the funds. So if you go back to the charts, they raised their funds. Let's go back to the chart. They raised their funds from December last year all the way to March. So if you look at the charts from December to March, the market cap was still okay for the crypto, was like around 2 trillion, right? Or higher. But where it started dumping here, we had the problem with Terra Luna issue, which had this dumpage, and now we had the FTX. But they launched here. They launched in June. So as a project, you don't want to launch in June after a dumpage of Terra Luna and a valuation of the whole market being $1 trillion, and still keeping your valuation 100 million. So basically you had a crazy sell pressure. And this is what happened. So if you look at the charts, let's see the maximum chart. It started 90 cents, but this is not showing it. And then, you know, it was 50 cents for a month. It went to 30 cents, 20 cents. And then after that, they just cannot keep up because there's more and more sell pressure. So imagine $10 million divided even by 20 months, $500,000 a month of sell pressure coming from pre-sale rounds. And they have to keep up with that. And they can't because they don't have that much liquidity. They have to put the, they've spent money in marketing, they've spent money with launchpads, they've spent money with exchange listing. They have to develop the game. So they might have $2-3 million to do the buybacks of the token. And for that reason, it doesn't work out for them. So that's the first reason, high valuation. So if you're a project, definitely reconsider your valuation in the bull market to bear market. Right now is bear market. So you're raising in a bear market to launch maybe in the bull market or in an uptrend market. So if you are thinking of a valuation based on the factors I said of 40 million, for example, cut it down if you can to 20 or lower, and just raise enough amount that you need for your runway, for your listing, for marketing and liquidity. Don't do a huge amount of raise as well, because it's going to impact your sale pressure and you have to fight that back again. If you do a valuation of 10 million, 20 million, I did a project actually called Boss Fighter. They were, so if you search Boss Fighter, they had a valuation of Boss Fighter. They had a valuation of 15 million, which is not too bad. But even then, they realized that the valuation is high and they reduced that to 7.5 million for the bear market. And this is a good valuation. 7.5, 8 million is really good valuation. They have going to be a release of even 10-20%. Like they have to fight sell pressure of $2 million over a period of 1 or 2 years. And, if they head to the bull market, the project is going to continue to go up, and pump. And they're going to get much more money back from their treasury rather than, a project that goes on $100 million valuation and having these sort of issues. So yeah, you've seen my video on Boss Fighter as well. Now, the second problem I have seen is the unlock schedule. So the projects, again, they raise in the bull market. They don't want to go and change the unlock schedule for a project. And the unlock schedule is very important because that means you're going to deal with the sell pressure that you're going to list. So obviously public round is more expensive. It has a bigger unlock, and then private and seed are cheaper with a smaller unlock over time. But just giving you an example, I covered the video recently about Atlas Navy, and I did say to you in the video, the project is good, but the unlock is not great. So if you see the price of the token and unlock, public sale is 20% at a price of 0.08. And then you've got seed at 5% at a price of 0.025. So almost 3.5 times cheaper with a similar unlock if you multiply 3.5 by the 5%. And then from next few months, they're going to have daily linear release of 7.5% per month, whereas public is going to have 8% per month. So that's going to significantly reduce the value for public raise and private sale round. Whereas the seed and strategic, they're going to have a huge amount of advantage. Even at price of 0.06 now, seed and private have a huge advantage here. Now, I had a project that I worked with and I did a video on, it's called Time Raiders. They had the exact same issue. So Time Raiders, I was the advisor as well. They had a unlock of 15% of IDO, and they had an unlock of, I think, 5% of seed round. But the seed round is 5 cents, sorry, 0.05, and the public round is 2 cents. So 4.5 times cheaper. And obviously the seed investor will be always in profit. So what happened when the project launched? The token price went to 0.025. Valuation is fine. It's just a sell pressure here. But seed strategic started selling off. And as the month went, the sell pressure continued to go on. Now, if you check the pricing for Time Raiders, the token is Expandium. You check the price at the moment is it's 1/5 of the seed round. However, the seed round was in profit up until 4 or 5 months after the listing. So here they could sell at 3-4x all the way to here. And this is where they start losing money. So as a seed investor, they made profit. They, got away with a success. But people who were public round, private round, they were the one that got the damage, unfortunately, from the project. And, I raised it to them. But again, as an advisor, as a partner, you can just mention it. You cannot make a significant amount of change to this. So the second problem is the unlock of pre-sale rounds, which projects need to pay attention to. The next problem is working with unprofessional market makers, exchanges, and listing partners. So I'm not going to name because, that's not, it's going to be an interference in the financial advice. But, for example, now you've seen what happened with FTX. You've seen what happened with Alameda. They are market makers and exchange listing, right? And the projects under them now are significantly damaged and lost reputation. There are other ones that's like Mexi, or there are other market makers that also give the wrong advice. And what happens on listing for these projects is they do something called an IEO, initial exchange offering. Some exchanges ask you to put like $200, $300, $400,000 worth of your tokens on the IEO round, and IEO round has a full unlock of 100%, whereas IDO round or DEX offering on Launchpad has maybe an unlock of 20%. So you will have a sell pressure of 300,000 dumping, whereas the public investors only have a sell pressure of 80,000. So that's another thing that I have seen. And I'm not saying it's the unprofessional behavior of the exchange necessarily. It's more that the projects underestimate that you want to go with an IU option. You don't have enough liquidity. You're not working with the right market maker. You're definitely going to suffer from this. This fourth problem that I have seen is working with unprofessional launchpads. So I'm not going to name again. There are a few, but DAWmaker is the top launchpad right now. Engine Starter is a good launchpad. If you want to go and research launchpads, go to for example, cryptorank.io or the Twitter page. You see these are the top ones: DAWmaker, Polka Starter, Red Kite, Bullperks, GameFi, Engine Starter, Pools. And you can see they've raised, for example, how much they've raised. They had 100 IDOs, 100 IDOs, 70, So projects that had 100 plus IDOs or even 50 plus IDOs, they are now in the know-how of how to do a launch. They know how to do an IDO. They have partnerships. They have built listing. They have all-time high ROIs that are very high. Whereas when you work with the smaller ones that had one IDO or 4 IDOs, they probably don't have the know-how and they don't even have the money to survive. And it causes sometimes for them to dump your tokens. So I just referred to an article that happened recently by Fragment. So they listed on Blockpad, for example, and apparently this is what the article says. I can't confirm or deny, but what happened is the token for Fragment was supposed to have 40% unlock on TGE, and it ended up having 100% unlock for Blockpad. So they sold the whole token. And what happens there is when you're doing your liquidity calculation, for example, you have a sell pressure of 300,000 and you want to fight that to keep your price above IDO price. And if someone like Blockpad comes and sells 100% of tokens, which is $100,000 instead of 40%, which is 40,000, you suddenly have an additional $60,000 sell pressure. And if your price is, for example, $1, your price is going to dump down to 60 cents. And when someone sees a massive dump in your price, people are going to be scared. People are going to start selling their tokens as well, thinking the project is a scam, and it's going to have a whole domino effect. So you should make sure you're working with the Launchpad. Again, I don't necessarily want to name someone. I'm just bringing an article that I saw. You should work with a Launchpad that's, like Pools, like DAWmaker, and like the other ones that have actually a very good reputation of how to launch in a successful market, whether it's a bull market or a bear market. And bear market is a very good indicator of which launchpads are actually good, because bull market, everyone's going to launch, but bear market is the real test for a launchpad. The fifth problem I see with most projects I work with is they launch with no utility. So just an example, for example, I saw a project called GetKicks. They are a really nice team. They have fundamentals. They work with DAO Maker and, you know, 4 exchanges, but the token utility was not out until the app comes out and people start testing it. So for move to earn applications, if you've used them, you usually need to have the beta of the app already out, people using it, people doing transactions, maybe on testnet, maybe for using BNB, for example, as the chain. And once the token is out, you can add the, for example, GetKicks token, so people can do the transactions there, buy NFT, sell NFT, do transactions, burn transactions to increase the utility for the project. So projects like Amazy, which I covered, Beefeater or StepApp, they didn't have this problem because they immediately use their token to be burnt, to be used as a utility. Whereas some projects in GameFi, in you know, like again, back to Time Raiders, they also make this mistake that the game was not out, and the beta was just coming out after launch. They did not want to wait, and this means your token doesn't have utility. Of course, you can do staking, but everyone knows that staking of a token that's just out with 10% or 20% APY is very, very risky behavior, and people will not really want to do that. Sometimes it's a good idea. For example, Zana was a project I worked with, Zana and StepApp. What they did is they wanted you to stake the tokens. By staking, you get allocation for Launchpads that they do IDO, plus they give you the NFTs that you can use for the application. So the only way to get it was for staking. So that's a different situation and scenario where staking is actually a good utility for you. So that's what happens with the staking, and that's giving you tickets. Number 6 mistake is not understanding the refund policy. So if you've launched a project or worked with projects or invested in projects in the last few months, you've seen that a lot of them introduced the refund policy. I think except DAO Maker and Podcast Starter, almost every Launchpad has a refund policy now. And with the refund policy, it's quite simple. For the IDO price or the launch price, it needs to stay above that for a certain period of time. Now, this depends on the Launchpad. Some of them will look at your performance for 1 week. Some look at it for 3 months. Some look at it for 4 months. But the thing is, you as a project need to understand this policy carefully, read it, ask the project and ask the Launchpad if you don't understand it, because it might cause a trouble for you if you don't. So for example, if I'm a project and I look at the engine starter one, they say the company needs to maintain the price for 24 hours at or above the IDO price for the 40% of vesting, right? So it means if I'm a project and I'm raising on engine starter and my sale price is $1, my project needs to be at $1 or higher for the first 24 hours on the day 1 of the launch. And if I'm doing, for example, 20% monthly release, second month also this needs to happen. And then on the 3rd or 4th or 5th month, that's fine because I already passed the policy. What this also means here for you is that you're not going to be able to get any liquidity or funds that's been raised from Launchpad before you pass these 24 hours because they're under protection. So if I'm trying to inject money to the exchange or decentralized exchange, I need to rely on my private sale and pre-sale investment before the public sale. And you need to take this into account if you're launching on such launchpads and in the bear market. This is a bear market situation right now. So you will get your money, but you'll get your money a day after when your price is still higher. If not, you will never get your money, and you'll be refunded, you get your tokens back, and the project usually ends up dying off because of this. Now, I know the policy is a bit harsh for launchpads, but they are also a business that doesn't have choice. I know in stock market or in even buying Bitcoin or Ethereum, there is no guarantee, you know, they go minus 70%. They don't refund you for that. Bitcoin is now 17K from 69K. So, you know, but it is what it is. It is a bear market. These projects need to survive, and this sort of protects them also from premature projects launching, right? So this is something that if you've raised well, if you've raised really well with your previous rounds, if you follow what I just said previously, valuation, unlock schedule, good market makers, good listing partners, good launchpads, you won't face an issue actually. So it's just that you need to understand the policy very well and act accordingly. If you're not ready, if your token doesn't have the utility yet, don't launch, because if you launch and you lose the value, your project is going to die and you have to put a lot of money, more money into it than you've raised just to keep the price higher, which then defeats the purpose, because then you need to raise another round with your NFT sale or something else to drive the utility and development of the project and your runway. Next problem that I see is weak marketing in Web 2 and weak marketing in Web 3. So a lot of projects, I give you an example. I did a video on Scapecoin. It's an awesome project. It's a real utility project. I would put more money into it right now. But the problem was when they launched, it works as very well for Web 2. It's a business, a commission platform in Japan. It's generating real revenue. But it came, and it's very big in Japan. But first of all, it's very Japan focused. Second of all, it only had a week or two of marketing, right? I was helping them actually. And that's not enough time for you as a project from non-crypto coming to crypto, from Japan to an English-speaking community to raise. So having that not strong Web3 marketing hits you. Whereas I talk about a project like Sweatcoin, they did quite well. They had a high valuation actually, but they did well. And the reason they did well was Web 2, they were very strong. For Web 2, they had Sweatcoin application, one of the top downloaded apps in the world. They had a really cool system where you could use it like Spotify to be premium member using your credit card, and you could win the points when you're walking and redeem it for things like Airbnb vouchers, Booking.com vouchers, Nike vouchers, things like that. And then 2 to 3 months before they do their IDO round, the public round, they went and worked with DAOmaker, plus they worked on developing their Web3 wallet called Sweat Wallet. 10% of people from the Sweatcoin economy moved to the Sweat Wallet. Immediate 100 million people, 10 million of them moved to Sweat Wallet. 10 million users, before you launch, accepted to use Sweat Wallet. And this was an immediate marketing campaign for them. And as soon as they launched for Sweat Wallet, they used the staking, and you could have now staked tickets to win tickets like a World Cup ticket, jerseys, things like that. So they worked very well for both Web 2 and Web 3. Another reason, which is the number 8 reason, is launching when the sentiment is low. So if you remember, I did a video on StepApp. StepApp did 150x. Why? Because it was low valuation, it was backed by DAOmaker. So it actually ticked all the boxes that just I mentioned and marketing. More importantly, it launched in April. And April was when we had a project like Stepen. And Stepen was really hot at that time. So if you go to Stepen, you will see that they see the price. So Stepen started around March, launched on Binance, did a 10x because people realized, oh, new way to make fun money, move to earn, awesome. I buy a sneaker, I make $20 a day, I make my revenue in 20 days. Token skyrocketed from 30 cents to $4, 10x. 10x a valuation of $2 billion, insane valuation. And StepApp came. They said, hey, we have a smaller valuation than you, fully diluted value of 25 million. We are also going to be our own chain. We're going to be a launchpad and also move to earn. As soon as it launched, people said, oh my God, this is a Stepen killer. And it was only the second project that was launched, right? And you could actually do it on a launchpad. It wasn't as hard as the situation with this one that you have to go through the Binance launch. So as soon as they launched, it skyrocketed all the way, and it did 140 or 150x. And you don't see that very commonly occurring, right? So obviously it wasn't sustainable for a long time, but people could basically buy it even at 20 cents and sell it at, say, 80 cents, for example. So like a 3-4x profit, let's say 3x profit on the market. So sentiment was very good, right? Whereas a project like GetKicks, and these examples I'm just giving, I have no issues with this project. I'm just giving an example so you see the story of what's happening. GetKicks launched a month ago. Now, a month ago already, Terra Luna issue happened, FTX issues happened, and move to earns already, we had like 10, 15, 20 of them pumping out. The market, the hot market for it is already dead. So when they launched, the price was good. It did a 20x for a first hour, but when they opened the claim, it went to a 6x, which is still very fantastic. But after a few days or a week, it went below IDO price. And now after a month and a half, it's a fifth of IDO price. Liquidity market cap is only 300,000. So, which is quite unfortunate. Valuation was 25 million, now it's 6 million for the project. And that's because some of the reasons I mentioned earlier, plus the sentiment is not there anymore for a move to an application right now. And heading to end of the month, end of the year. The next reason is launching on less known chains. This could be good, but also could be bad, depending on the situation. So there was a project called Sweatcoin. Sweatcoin was backed specifically by Near Protocol. Yeah, it's a lesser known protocol, but it's still a top 10 blockchain project. And it also launched on Ethereum. So having both Ethereum helped, as well as Near Protocol, because then you can trade it on 2 places plus 10, 15 centralized exchanges. So these all helped Sweatcoin because they can then have that buying and selling pressure. People know all these chains, and they had their own Sweat wallet. So even people who don't know how to use crypto, they could trade within the Sweat wallet if you download the application. And remember, you want to bring new users into Web3. So you want to use the chains that are more known. What are the chains that are more known? It's Solana, Binance, Polygon, Ethereum. Now, Solana is less popular after FTX, so scrap that. Near Protocol by itself is right now is used, but not widely used. And all these new ones like Aptos or other ones, they're also not widely used. So that's one of the reasons. And there was a project, for example, called, I think it was called Fusotao. Yeah, Fusotao. So they relied heavily on Near Protocol. As soon as they launched, the price dropped massively because some of the reasons I mentioned earlier, plus the fact that it was only on Near Protocol. There was no buying pressure for it. It was only listed on one exchange. So this is also a thing that you need to, it is good if you partner up with a good, if you backed by Near Protocol and they're heavily supporting you, it's a good idea. But it's better if you don't have that much support to launch on a well-known chain like Polygon or Binance. There's a reason why everyone's moving into EVM compatible chains. Again, going to Boss Fighter, they were in Solana first. And after all the issues that happened with Solana, they now are moving to Binance chain. Because they want to be EVM compatible, because they see Solana has been having issues, they see the FTX problems, and they're adapting to it, which is a very smart idea. So being adaptable is also another reason for it. Now, another reason is also, as I said, the marketing. You need to have strong marketing and working with professional people who are marketing and having real community, not using bots, not using people who are just chillers, but you need to add people who add value and have a real community to buy your tokens. For example, I did a video on Paradox. I know some people say it's a scam. Yeah, maybe, I don't know, but it has real community. It has real buy pressure. It had real influences behind it. So I would invest again if in a project like that. And the 10th mistake that projects are making is very simple reason. It's never too late to change. Time and time, I see projects making one of the 9 mistakes I mentioned earlier in the video, and they don't want to go back. They don't want to go back and change it. Maybe they have high valuation. They're scared to change it because of previous investors, or they raised too much. They don't want to refund. Their tokenomics is not designed well. They work with bad marketing companies. They already spend $100,000, for example, and they say, oh, I don't want to waste more money. But the thing is, maybe that $100,000 was wasted, but if you don't spend a bit more, it's going to be wasted more. So basically not going back, reviewing, taking the honest feedback from people. And advisors are not always the best people for you. You also need to talk to neutral people, to launchpads, to people who have been successful in this space. And that's a key for you. So never too late to change. Never too late to delay your listing. If the market is not good, don't do listing. If you don't hear good things about the Launchpad, don't launch there. If you don't understand the refund policy, ask questions. Work with good exchanges. So always double check, always look at these rules, and it's never too late to make a change and make a return. So some of these mistakes are also I guess ideas for investors to think about, and if they see these in some projects, these are red flags which you might have to avoid. And these are some of the learnings I learned this year in 2022. The bear market was very good education for me. Yes, I lost money through the hack, which I did a video. Yes, I had bad investments. Yes, I advised projects which didn't listen to me and didn't do well. But I also work with very great pro people. I learned a lot, and I can make a video like this confidently and help people not make the mistakes I've made. But if they listen, the number 10 rule that I just mentioned. So I hope this educational video was good. Make sure you like, make sure you subscribe, and let me know how you think about this video, because this is the first time I'm doing this sort of detailed video rather than the typical launch ones that I'm doing. If you like it, I'll do more, and let me know in the comments section what would you like me to do and cover next time. Thanks for watching this video, and let's see, I might do another video before the new year, but I'm traveling, so I might be overseas for the next 2-3 weeks, so I might do or might not do, but I'll make sure to see you next year with more energy and more positivity. Thank you.